All righty. Been a long time. So, the story of the day today has to be gold and silver finally getting a downtick. And not just a downtick, just absolute drubbing. It's had to happen. I mean, they've been kind of grinding away fast and furious with literally no regard for any, I would say, normal market movement. And, today appears to be a little bit of a reckoning for gold and silver. Gold now down 300 points, down 5%. Silver down 16, down 14%. Probably the biggest movers today overall moving. Also, is that palladium? I think that's platinum. Platinum also getting hit, down 12%. And like all the metals, and even palladium down 9%. But the big one today is silver. And, is it a time to buy and step in? I mean, I don't know. Volatility continues to be high in all of these commodities, even the ETFs. I'm not really ready to step in and say, buy the dip here. This is a big move. I would prefer to see this thing stabilize a little bit. I think maybe the metals market that may look better, in my opinion, for a little buy the dip moment, perhaps might be copper. And really the only way to play copper, in my opinion, is through the miners. Now, I know there's a number of ETFs out there that concentrate in mining, but there does not seem to be too many that are specific to copper. I think there is, but even though they say they are, they're really, they might just buy companies that are more concentrated in copper, but not exclusively. And really the only company that I'm aware of that I normally play for copper is FCX. And that is Freeport McMoRan. And that stock, if you look at that stock, it's actually getting a bit of a, whooping today. But even this stock is kind of parabolic, and I don't even know if it's good to step in here, but who am I to say that where this thing is valued at? I would have to say that, it's extremely overvalued right now, but just from a chart perspective, I would go back as far as July of last year. Here's like the July time frame. Let's see, it's actually not July. It's about May of last year, 2024, which is about $55. And so I would look at that as a possible area for an entry. And we'll just do this real quick. I would look at that for an entry. Now, whether or not it comes to fruition or not, I don't know. Again, I would look down at this area here and look at this being more of a, and then we're just going to change the color of this just so this is like more neutral. I don't like that. I'm going to go with like a grayish. No, I don't want that. I want to go gray. Just as kind of a visual here, I would be looking and again, if you look at it based on, that's another $10 they would look to clip out of this to maybe take advantage of. So that's kind of what I'm seeing today as far as like opportunity. Where's the opportunity? Even though I don't think it's really a good time to buy. I wouldn't step in and buy the dip. If you do buy the dip in gold and silver, the only thing I could say is stay away from the futures. Because they're just, they're too high priced. Even the micros, I think they're too overpriced, too much margin, too much capital, and too volatile. And, I would just stick to something simple, like a simple call spread or a call spread in one of the ETFs, SLV, GLD. Keep it purely simple and be completely directional and just do something very small. I mean, that would be my take on on this move. And I would say copper, to me, is a better play here on this pullback than many of the other metals because, comparatively, copper, although it's up on the year and has had a really good year, overall, it hasn't really, it hasn't moved as much. Even though it has moved, it's not up as much as everything else. And if there's anything that kind of holds its weight as an industrial metal, right, it's definitely copper, right? I mean, and if they're going to be building data centers, guess what's in data centers, man? There's a ton of copper because they haven't really figured out a different way to run power to all these racks. The only way I'm aware of is running Romex. So, and Romex is made out of copper. So that is what I'm looking at. And then if we're going to look at as far as a trade, you see I'm actually getting beat up. And I have a lot of gold and silver in here. And so I'm getting beat up today. But if I'm looking at Freeport-McMoRan, I would be looking at some kind of, I think you could do a little bit of, and if I was looking for this as maybe a little bit of a copper proxy trade, seeing the volatility is actually pretty decent in here. I would go out. I mean, you really need to do February because if you look even in February, and I don't really like to do the weeklies because I'm not a fan of them. I think the statistics in them are extremely misleading because of their time frames. And I would stick. And there is a huge jump between February and March. So you're going to have to do this one in February, even though it only has 21 days. But I like doing something like this. Like maybe sell some 70s, sell a 70 call, and maybe go right around the money, 60, even if you want to give yourself. Now, this is not going to be priced. The strangle overall should be priced right, but the prices on the puts and the calls are actually going to be much different than they are right now. And that's what kind of sucks. And I hate the fact that they don't have pre-market pricing on options. It's really, to me, it's absolutely just ridiculous that they don't have it. And I've heard a lot of different angles of why they don't, and I think they're all full of shit. Because you can't manipulate a market if you have to disclose what the prices are. So, and I think it's kind of the last true bastion of market makers being able to really influence markets because other markets are so liquid now. It's very difficult for them to manipulate big stocks. It's very difficult. There's just too many transactions and it's overly liquid. But where it just blows my mind that you can't come in here and actually have these priced at 9 o'clock, even 8 o'clock, because you know what the prices are going to be based on where the underlying is. Just open them up. I don't get it. Even if you can't buy or sell them, at least you can get a quote on it. But anyway, I would do something in here, in this area. I'm thinking maybe a 60 or even a 59 or 58. Even a 57 and kind of stick. I like the 70 up here, but I kind of like this type of thing, doing a strangle. And don't pay attention to this because I'm in the wrong account. I need to be in a margin account, and you'll see that margins in here are actually margins in here are excellent on Freeport-McMoRan. They always have been. And then something like this is going to run you about $700 of buying power. Max profit's 236, and you got a probability of profit between 67 and 71%, which is a nice place to be in this. And then, you're kind of playing it for a little bit more downside. And then you're also, short some of these calls up here to kind of give yourself some room that if it does come down, you can roll these down. And then you can actually roll this out into March, too. And likely, I would hold on to something like this since it's only 21 days. I'd be probably looking to get rid of this by next week. Look for this volatility to collapse a little bit and roll the hell out of this. Either roll to March or just get rid of it altogether. But I like this trade in here. This is a very, very liquid stock, so you won't have anything to worry about as far as like getting in and more so getting out. You can see there's tons of open interest up and down the option chain, all the way up to the 80s, and as well all the way down the chain here. There's even some folks even taking some stabs down here at the lower end of its range. But this thing has been just an absolute beast along with all the other metals. So that is kind of what I'm looking at today. I don't think this morning would be complete unless I actually looked at Crapple. Looking at, if I'm just going to change gears too and look at some of the indexes, quite honestly, it has been an absolute effing chop fest. It has been a chop house this week. I mean, and unless you've actually been able to catch these moves, I know I've gotten caught up a number of times. I think I'm up a little bit. I know I took some losses. I took like a $250 loss yesterday on the Russell trading it. I just gave up. It was just way too choppy. For my strategy, I could have widened my stops and I would have been right on a lot of trades I did. I just don't particularly like to use wide stops. I mean, I've let that be known, and especially with futures, if I'm wrong, I want to get the hell out of the way because I'm more than happy to take a second trade. And that's how, and if you look at these are 1 hour candles in the Russell. It was just insane yesterday. And I just, I don't like to expose myself to that much risk. And it's been that way in all the markets. I just think they're way, way too choppy in here. And, if you are trading, I think you're using wide stops and you're gambling at this point. And I'm likely not even going to do anything today in futures unless something changes or unless I see, maybe one of these markers here, one of these pivots get hit. S2 was pretty profitable bounce yesterday in the Russell. So I might take that trade if indeed we get up there. But I'm not really going to be looking for much in here. And so let's switch gears and talk a little bit about Crapple. Apple had earnings yesterday, and it was literally a nothing burger. I mean, when I talk about it, it was like nothing. Net sales grew, blah, 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 all the things, and it went absolutely nowhere. Now, I don't know what happened on the conference call, on the earnings call. I don't listen to them because it all sounds like a crock of shit to me when I listen to those. Anybody, and I ran into a number of podcast people that were listening to it. I know people do. I don't know why you're sitting there listening to that shit, folks. I just, it's corporate speak America 101 in those conference calls. And, they're not going to, unless somebody has a complete, utter, meltdown moment where they say something that is hidden or, everything they're saying has been scripted. They're reading off a teleprompter. I mean, so, and I don't know what you gain from those, but, anyway, it didn't seem to move the needle on this. I think it did not go anyplace yesterday. I don't think it went anywhere from yesterday. It's literally at the same. Now, that's a good thing because, like, Microsoft yesterday blew up the market. But it quickly got digested. But there's, without a doubt, Microsoft blew up the market yesterday. Because with Microsoft's earnings and everything, everything was like getting just demolished. I mean, we had the ES down almost 100 points. The Dow was down at 1.4500. NASDAQ was down 400 or 500, even more. But you had a number of issues that were actually up. And again, the market eventually digested it and absorbed the bad that happened with Microsoft. So I bought some yesterday. I didn't buy stock in Microsoft, but I bought some calls. I was like, screw it. And I actually bought some in the money stuff. I think I did a 430. I mean, I'm in some other stuff now. Look, I always more than happy to tell everybody about the dopey knucklehead shit that I have. I got 400, 410 here. I think maybe, is that the one I did? I think that is what I did yesterday. I did the 400, 110, but I have 600s. I have 470s. I got 500s. I got 480s. I got 550s. So I've been buying this on the way down to my detriment because I'm getting hammered. I'm not getting hammered. I mean, being down $600 in a position is ain't nothing. I'm spending $1,700, but I kept it small. I did a 400, 410 because to me it was worth. Seeing that thing get hammered and looking at the chart here, I still think that's a good trade, right? Because I see a lot of it, right? We have this huge gap here that didn't actually get filled yet, but we do have this big high volume node here, point of control at 415, and that was what I was really looking at. And I was like, you know what? I mean, I could probably wait and see if there's going to be another pullback and then they smash it. But I'm like, you know what? I'm so far out. I'm out in December. Did I go to December or I go to Jan? Yeah, I went to Jan 27 is what I did. So I'm in leaps. So, and then one thing I've learned, folks, over time, when you get big moves in some of these big, large stocks, I always find it better to go out and look at the leaps and go and look outside of that short term and stay away from piling into the shorter term stuff. Because the problem with that stuff is that there's so much implied volatility in those shorter contracts that even if you get a move and the volatility kind of collapses in those options, you're really not going to get the move. Whereby going out in time and going that far out, you're taking volatility out of it, which is what you want to do. Especially, like, again, this is an investment for me. When I'm going out and buying leaps that far out, this is an investment. This isn't a trade. I'm gonna hang on to this, right? Through thick and thin. Same thing with all these other ones that I'm getting my ass reamed in, right? I'm hanging in. I'm just playing long ball there. And so I saw it as an opportunity to buy. I still may even get a few more of these. I may get a couple more of them, but I think that is to me, that's the good strike to be in out in January. And so I went and bought Microsoft. Apple, on the other hand, now I'm, full disclosure, I'm Appled up to the wazoo. I have, it is by far my largest position, and I would care not to tell anybody how much I actually have in Apple. Not that it's something, it's just something I don't want to let anybody know because it's decent amount. But I don't know. I personally don't know what else to do with it. And I don't know if adding more here is such a good idea. I do like, however, this area down here, and I'm a little annoyed at myself that I didn't do more. I sold some 250 puts, and I think those are actually not a bad spot for Apple if I was going to do something. And the puts that I did, I went out to December. Again, stock replacement, cash secured, whatever you want to call it, went out to December and sold the 250s. You can sell these for $19, right? It gets you about 40 deltas. It's about the same price as far as margin to buy 30 shares. I think if you bought 30 shares of Apple, it's probably about the same. Let me see. I don't know. I don't want to be a liar. But I think, what was it, 39? We'll just say it was 30 shares. How many shares was it? Let me see. I believe it's about the same. Yeah, it's 39. So let's just do that we'll just do the math for you real quick. So if I were to buy Apple and I bought 40 shares, let's see what that margin is on that. Yeah, it's $5,000 to buy 40 shares as opposed to $4,200. So you're to the good about $1,000. You save about $1,000 by selling the put. And if you get assigned, great, right? Then you own it at $250. Your cost basis is well below that, so just be aware of that. Your cost basis is $240 and change, or probably $240 and change, because you're selling it for $19. And and so that's how I would play Apple. If I needed to add on, that's where I would go. Those 250 puts to me look like a perfect spot, especially out in December. And if you really want to, get creative, then go out to January. Go out to the Jan 26s. They should have Jan, or the Jan 27. Do those. You'll get close to. You're not going to get that much more because it's only a month. But this one is a true leap. The January 27 is a true leap. So anyway, if you want technicals, I call anything longer than 45, whatever, even though it's not. The true leap is the January. So let's get it, because I know someone's going to say, whatever the fuck you want to call it, just do the January. It doesn't matter what it's called. It still has the same principle. So that's where I would land. I would do that 250, and I would avoid trying to go shorter than that, only because I think this is a longer term play than just playing June or July. All right, and so that's kind of where I would be at with Crapple. The other one I was going to look at here was a CrowdStrike, which kind of got taken to the woodshed yesterday a bit, down 5%. I don't really know where. I kind of like it down here at about $400. It's $40 away. But being somebody I'm not going to, if I see something get kind of smoked like that, I'm always going to be looking to get ahead of the curve. But something like CrowdStrike here, I kind of like a skewed iron condor to the upside, and possibly even going as far as now. If you look at some of these shorter term options, March has the most volatility. Now, they do have earnings March 3rd, but March has the most volatility, and it kind of falls off. So that's the spot to be in for CrowdStrike. And I particularly like the 400. Now, I'm not going to do a strangle in this because you can see it's way too rich. But I like the 400, 500. I think it's a really nice spot. You're going to need to do it 10 wide. Now, these options are not going to be priced right. here because it's based on, they're still based, well, it's not really even moved overnight. It's actually down a little bit. But that's where I like to be. And for a trade like this, like it's literally a 50-50 shot. And I think you're in a good price range for this thing to do really nothing over the next 45 days. So you're going to bring in $465. It's only going to, you can see the margin's literally nothing. It's a $500 trade. And you have some maneuverability, right? You can roll these down. You can roll these up. You can kind of do the whole, roll as you go type of thing. And I think it's a really good spot to be in here, especially seeing that, kind of looking at some of these names they took out to the woodshed yesterday, pretty hard. And other than that, that is kind of really only places I'm looking. I'm staying away from the SanDisks, the Microns. These are just absolutely, I mean, if you're already long on these, congratulations. I just can't be one. I can't pile into anything that goes up like this. I can't. I just can't do it. I get sick to my stomach. And I know, I almost should go into it just for everybody else who's short, because I know the minute that I pull the trigger on something long, it's going to collapse. It's going to have one of these days where it's going to be down like 5, 6, 7, 10%. It's due, folks. They are due. I don't care what's in the pipeline, and I don't care all the other. It's due. Again, it's just, there's gravity. Gravity always wins with stocks, regardless of what anyone says. Gravity always wins, and I would prefer to wait and see when that happens, and then I think by all means that'll be a great trade. And then some of the other things I did yesterday was ETF base, but it was in the AI. Well, I'm considering AI. I bought the URA, which is the Global X Uranium ETF. And I actually just bought it. And what I did here was I did a covered call. So I bought the stock. And as you can see here, I bought 100 shares and I sold the 60s. And I sold the 60s in February. So I bought 100 shares. It was down. I bought 100 shares. I sold the 60s. That put my cost basis down to about $55, $54. And that was my play. I actually wanted to get a little more neutral. And so my play in here is on movements down if it starts to get near $55 and it continues to slide, I will roll my call down and probably roll it out into March. But I will also be selling 55s. Now, I was going to sell the puts yesterday, but the reason I didn't, because I'm going to do this as kind of a multifaceted position. I'm going to start building a long position in this ETF. But because I do see I see a little rough road coming in this space, that it had a big pullback, because what I did is I actually went and looked back. Was it this one? I don't remember if it was this one or a different one. Maybe it was a different one. Anyway, I'm looking at this, and I just think this space is going to remain relatively hot, but I don't think it's going to just get a pullback and go through the roof. I just looked at an opportunity yesterday to kind of own these names, all these names, with this kind of selling off, and they all did, as opposed to just going into the single plays like the CCJ. I think CCJ is another one that I would like to start building a position on if it actually has another little bit of a reckoning, but I'm just not ready yet. So that was kind of one of the things that I'm doing now, is in the URA. Now, I don't know if it's going to work out. That's why I sold the calls. And that's why I didn't go all in at once, because I wanted to have a little bit of flexibility to be able to, if it does continue to kind of come down here, and I'm looking at the bottom here to be about $50. Like if it gets down and it breaks $50, then I think, pretty much what I did would be over. I would have to think of an exit strategy. But, I think nuclear is going to be a big thing, and not just nuclear reactors where, what they used to do 50 years ago where they build a reactor and it's going to power homes. They're going to build these micro reactors next to these data centers. And that is where the growth in nuclear is going to be. And they're going to be kind of self-sustained power plants for these AI data centers. And that's just my feeling of where this is going. And I think that's how you're going to take advantage of it. All right. And so that's it. That's really all I got. The tape is very light today. Overall, it's not very busy. I see treasuries bounce back to some of the market. It looks like the bonds are actually getting hit a little bit, so yields are up. The dollar's actually bouncing a tad. Crude oil remains bid as well. I'm going to continue my bullish stance on crude oil. I do think this thing kind of blows its brains out at $70. That's kind of where I'm targeting. I shouldn't say 70, but anywhere near 70, 68, 69. I'm going to be looking to start exiting out of my crude oil. And natural gas is back after having, getting blasted just a few days ago, finally getting just absolutely wrecked. It's kind of back now. Back up over $4. Big day today, up 3%, and that's running. And it has all to do with, again, I think it has more to do with powering these data centers than it does about the weather. And so energy remains hot, even though metals seem to be kind of consolidating a bit. Markets seem to be stagnating. But overall, these sectors that continue to play and be very strong, and there appears to be a decent amount of rotation going on, is anything energy. Anything energy, like even XOP. I think it finally broke out of this range yesterday. Now, whether it holds up here, will be interesting. If it does, it's kind of broke through here this morning, and it is down a little bit, but it'd be very interesting to see if this can break out, because XOP, this is something that was up near 160 back in March of 24 last year, and this thing really does, in my opinion, have a good amount of room to run. First target would be 146, next target 149, and then, along the way, and then up here is 162. So it does have some room to go. It likely won't be a rocket ship, but this is another spot where I think is going to remain fluid going forward. And as you can see here, when you start looking at just these are the ETFs, and I look at these as sectors, you got the USO, which has just had a massive move. This thing was down $68 just a little while ago. Is now almost $80 now. Yeah. And so anything energy seems to kind of be holding itself, where if you flip it around the other side, a lot of the, I would say, like risk on stuff that everyone's been piling into over the years, especially over the last year, kind of got whacked yesterday pretty hard. That being, here's the metals. Bitcoin seems to be kind of in a really bad downdrift. again as well. Even though it did bounce back over 90K, it seems to be it's about 82 now. So that's having issues. XLK, which is technology overall, has been pretty horrible outside of like the chips and some of the storage type stocks. Technology overall and big tech has been pretty lousy so far in the last couple of months. So anyway, just that is really it. That's really all I got. I'm going to be trading today with Kid Gloves, and going to be looking to possibly do Freeport McMoran, as I mentioned. Maybe again watching that URA, that uranium ETF. As I suggested as well, if you really want to do something in Apple here, I think those 250 puts are pretty good. And then also Microsoft too, I think is something worth it. So that's it. I mean, that's all I got. So here we are, and it's Friday, and trade them tight.